Hello, tradeologists. Hey, so how do we actually determine when to close out positions? This is a very good question. We've already closed out a couple of positions in our current May trades, but let's take a look at the numbers because we manage by the numbers, right? Well, here's one way to take a look at it, and this is a very simple way. Just take a look down at your theta column. Now, theta, remember, is the amount of money that we collect on a daily basis from open positions. Okay, so if we took a look at our diamond position right now, we're only collecting $1.31 from that position on a daily basis. Is it worth the risk to keep those positions open if we're only collecting $1.30 a day? Now, remember, these are only one or two contracts at a time. However, let's consider that for a second. We are in the business of collecting premiums. Insurance premiums are basically from people who are taking directional bets. They think the market's going to go down, and they think the market's going to go up. We sell them those options, we take those premiums, and it's our job to manage our business based on the amount of theta that we actually collect on a daily basis. Well, if you take a look at this position here on the diamonds, we've only got we can only collect $1.32 on those positions on a daily basis going forward, and there's only 4 days to expiration. Remember, in the last week of expiration, price is the most important determinant of where our position is going to end and whether or not we're going to have a profit and loss. But if we're only collecting $1.30 in theta, does it really make any sense to keep those positions? Probably not. Also, on our SPY position, we only are receiving $2.96. Now, out of the $93 of theta that we can collect going into expiration, the majority of that is in the EEM position and the IWM position. So, does it make sense to close out this diamond if we're only able to collect 57 cents of theta? Yes, it does. If the SPY position, we can only collect another $3 a day of theta, it's not a lot of money. I mean, even on one or two contracts, I don't think I'd be tempted to keep those kind of positions if, in fact, the market goes against us. And that's just a risk at that point, because what we want to do is collect as much theta as possible. Once theta gets down to these levels, it really doesn't make any sense to keep those. So we're going to be closing out those two positions today. We will keep the EEM and the IWM because we still have pretty good theta on those, and we're collecting almost $90 a day on those. We did pare back a little bit on the SPY, and that's the free call video. We also pared it back a little bit on the diamonds because we also had a short position on the diamonds here at the 132 level. We closed those out for 4 cents. And basically, that gave us also a long call on the diamonds as well at 2 cents here. We can't lose much more than 2 cents. That's all we can lose on that position going forward. So we might as well keep that 2 cents. And if the market does rally as we expect it to do here, then maybe we'll get a little bit more profit out of that. If not, it's no big deal. So our current profit position, because we did take off those short calls to the upside, you'll see that the white line will continue to rise higher. However, we're pretty close to the center of our profit graph. We did take about $600-700 in profit already. So going into expiration with about 4 days left, we only have just a little bit over $1,000 worth of additional profit to grab out of these positions. Once we do, we'll pretty much hit close to our maximum profit for the month. I think our maximum profit at any one time in this position was $1,800, and if we continue towards expiration to continue to go up, we should grab another at least $600, $700, $800 in this position, and we'll have pretty close to the maximum, at least 90%. And if we do $1,600 in profit on $3,600 in margin, what kind of return on margin is that? It's pretty high. That's close to 50% return on margin in a month. So remember, we only trade one or two contracts. This is a very small position. You have to paper trade before you begin to trade these positions. I know how excited you are about to get into this business because it really is a very interesting business, very profitable business, but trade slowly, one or two contracts. And I'm going to actually prepare for you a plan to show you exactly where, when, and how to begin increasing your size in those positions. But if you're doing live trading, one or two contracts, please, for at least the first 3 months, until you get used to this platform and also get used to understanding how your positions are managed correctly. All right, that's it for today. Trade with confidence, guys.